has released a note on what to expect for the year ahead. Will Nifty reclaim its peak or will the pain continue? Mihika, what's the answer?
So they do expect markets to remain weak during Q1 of 2025 and then to stabilize by the second quarter of 2025. The Nifty target does remain unchanged at 25,000, but the small and mid caps are expected to outperform. In terms of what the key themes for 2025 is, what you should look out for, first is consumption. They do expect the sharp consumption slowdown to reverse by the second half of the year. They do expect this to be led by rebound in IT-led job turnaround as well as relief from the unsecured lending squeeze. A second theme is capex. They believe supernormal growth in capex is done and it will track overall GDP from here. The government has very limited levers to crank capex up. They do expect a minor uptick in corporate capex, but nothing big enough to move the needle. Lastly, real estate remains a bright spot in terms of capex. The FPI selling should abate by Q2 of 2025. They see minimal risk of a full-blown trade war after Trump inaugurates as the next president for the United States. And another theme is the small and mid caps. They do expect another year of moderate returns for the Nifty around 6.5%, but the SMIDs are expected to deliver stronger returns because of the fundamentals. When you talk about the sectoral preferences, they have downgraded technology to a neutral because of valuations, but upgraded consumer discretionary to an overweight on expected turnarounds. They have some top ideas for 2025 as well. In the large cap, it's a Lupin, Zomato, as well as Tata Motors. For a mid cap, it's IndusInd Bank, Escorts, as well as 197 Communications or Paytm. And in the small caps is Stovecraft, Metropolis Healthcare, and Kescorp. They've also made some model portfolio changes. They've added stocks like TVS Motors, Page Industries, Lupin, and 197 Communications. They've increased the weightage on Bharat Petroleum, L&T, TCS, Infosys, and Shriram Finance. They've trimmed their weightage in Bharti Airtel, Reliance Industries, Infosys, Godrej Consumer Products, and National Aluminium. And lastly, they've exited their positions in counters like a Hero Motor Corp, Ambuja Cement, HCL Tech, Axis Bank, as well as the HDFC Life Insurance.
Okay, that's the Emkay portfolio. It's a strategy for 2025. So don't look at 13th January, 10:06 and think, what do I do right now? Things could change and we'll have to wait and see. Today is, of course, a tough day, undoubtedly, in the markets. Axis Bank doing okay. IndusInd Bank is also something to watch out for. The only Nifty 50 counter that has gained in trade today, about 3% up. And this is because of the MSCI Standard Index increasing its weightage on IndusInd Bank. Harsh joining in with more details.
Well, likely to increase in terms of the weightage on IndusInd Bank in February as part of the rejig. Why is that so? Because your December shareholding has come out. Now, for context, 74% foreign ownership is the cap for banks. Generally, if the headroom, which is the difference between the actual ownership versus the permitted ownership, is 25% or more, then you will have a chance of a full weightage on the index. Currently, the weightage is half because as of last quarter, the foreign ownership in IndusInd Bank was 55.5%. Now, as of December 2024, the ownership has fallen to 46.6%. Therefore, allowing MSCI to increase the weightage or keeping the weightage at 1 time versus half time. And that increase in weightage or doubling of weightage could likely lead to flows of around $200 to $300 million as per analysts. These flows is roughly 5 days of volume for IndusInd Bank. So a large chunky volume to likely to come if this weightage were to go up come February.
Okay, another report that you're tracking this morning is Goldman Sachs on BSE. The upside is 1%, Harsh, but what is Goldman Sachs' rationale?
Right, 5,060 being the target price. I want to put the target price out of the way. What Goldman Sachs is saying is that the exchange, of course, just one of two exchanges in the country, is expected to benefit from strong growth tailwind. In terms of where the growth is going to come from, one is the corporate earnings, which will likely aid the trading revenue. As per Goldman Sachs, the trading revenue vertical. Now, 60 to 70% of BSE's top line comes from this particular medium in that sense. Retail participation and derivatives also will offer long-term structural growth for the company. They're expecting BSE to maintain the cash market share and increase 4% market share in the option segment. With regulatory changes coming through, that is likely to happen as per Goldman Sachs. On the regulatory front as well, they believe that regulatory restrictions of sorts will only aid BSE, just in terms of the numbers, given that it's a duopoly market. Last off, penetration is still low, is what they believe. Futures, options on both sides, penetration is low, especially more on futures than on options. And their estimates are 13% above consensus, but the target price is 5,060 rupees per share.